Welcome to the show. Today we'll be covering the Trump tariffs and all the fear that's in the economy and investors right now as Trump keeps rolling out even double tariffs against Canada, doubling down. And people are wondering, is this going to destroy the economy? Are we headed for a recession? And why is he doing this? Well, I'm going to explain once again on this episode, why I believe we're still on track for the biggest bull run of all time here in crypto, and why I believe this is ultimately a strategy by President Trump to get Jerome Powell, the head of the Fed, to lower rates and therefore stimulate the economy. As Anthony Pompliano puts it, a game of chicken essentially between the Fed and the president. Now, even his voters are doubting him, saying, why is he doing this? Why is he trying to break the economy? Are we now going into a bear run? I still haven't flinched in my viewpoint. I believe we are headed to a very, very glorious time, the digital golden age, as Trump puts it. And in fact, Trump just quoted the other day, "We are going to become so rich you won't know where to spend all that money." So we're going to dive deep on how that's possible today and also examine the recent tariff war with Canada and how that could play out for the better for both countries. As well as having a look at Bitcoin and the ranges. We are still in a range from 80,000 to 95,000. I'll give you an outlook from one of my favorite guys in the space, Arthur Hayes, the former CEO of BitMEX, as to where he believes this could be going. And we'll be going over the HBAR Hedera hashgraph chart set for an explosive move with Tripp, the lead analyst of the Capital Mindset Trading Group. So it's going to be a very good episode. I'm so happy to be here with you guys today. My name is Megan Nilsson, aka Crypto Megan, coming to you from sunny southern Spain, Marbella. Let me know where you're tuning in from, and let's do this. Okay, so first up, let's just examine what Trump is saying about why he's putting these tariffs on the economy that are shaking investors out like crazy. There's a lot of uncertainty happening. Is this uncontrolled market chaos, or is this part of a greater plan? So first up, he says, that this is part of a necessary transition to a new, rebalanced U.S. economy, but it's taking a toll on the financial market pricing as well as spending, investment, and sentiment across the country. So one consequence of the tariff chaos is the quandary that it could put the Federal Reserve in. Rate cut expectations are picking up again due to the deteriorating growth outlook and possible recession fears. So it's really heating up in the markets right now as people are wondering, what is Trump doing? Is there any kind of method to his madness, or is this all a part of the greater plan? So let's have a listen as Trump states he believes the markets are going to soar.
Financially, we'll be stronger than ever before. I think the markets are going to soar when they see what's happening. I'll tell you what, I'm called every day by numerous big companies. I spoke at the Business Roundtable yesterday. They had the largest attendance they've ever had. And these are only the CEOs and chairmen, but mostly the people that run the boss, the people that run the top 150 companies. 150 people showed up. Every single company showed up. First time it ever happened. It's been around a long time. The biggest business leaders. We had a great discussion. It went really well. And I want to tell you, there's tremendous optimism out there about our country in terms of regulations being cut, in terms of taxes being cut. And it would be great if the Democrats would do what's right. It would be great if the Democrats would do what's right for our country for a change, because they really are. They've lost their way. They've lost their way.
Okay, so yeah, it's kind of just, people are questioning, why is this businessman, a guy who's so concerned with how the stock market is doing and leaving his legacy is making the economy boom, why is he breaking the market? Well, he actually he's laying it out there for you guys. He's laying it out there, plain and simple. He wants to have temporary damage done to the market and a little bit of turmoil in order to start that necessary rebalancing to yield America's power in all the different areas where we have trade, and to try to come up with better deals for the U.S., as well as trying to force the Fed into cutting the rates. So I believe that in the end, he's just doing what's necessary to try to strengthen the economy, because that is his main concern. My viewpoint here is unwavering. I believe we are in a bull run. We've just seen extreme fear a 10. Extreme fear in the midst of a bull run, worse than Terra Luna, FTX, all of that. Off what? I mean, FTX and Terra Luna actually made people's bank accounts explode. Things went under. There were bankruptcies. They couldn't pay. Nothing like that has happened in crypto right now. So why the exorbitant selling? It doesn't make sense to me. I do believe this is a phenomenal opportunity amidst this potential super cycle that we're getting started with. And I know a lot of people are triggered by this or upset in the comments, and then other people are like, yeah, that makes sense. Thank you for coming on here and keeping us optimistic and keeping us focused and seeing the bigger picture. So if this upsets you, well, I just encourage you to look at all sides of the story. And I'm going to go over something by Arthur Hayes at the end of this episode, which you may like, which explains it better, possibly, or summarizes it a little better, in saying that, hey, if you can't stomach this volatility right now, and we may even head down to 70,000, although it's very unlikely, we may do that. We're almost already there. I mean, we've already hit 75, 76,000 in the low 80s. If you can't stomach that in the meantime, then just wait for the reversal on higher time frames. But I don't believe that's as far out as a lot of people are saying it is. And yeah, it's just patience, people, patience. I'm telling you, it's patience. So if you don't want to catch that falling knife, wait for reversal signs. But otherwise, it's a phenomenal time, in my opinion, to get positioned. I just got into a trade, several trades last night on huge levels of support, which we do go over in the Capital Mindset Trading Group. There is a link in the description below, guys. I cannot stress enough how important that skill set is and how amazing it is to keep you up to date on all the best trade setups there are right now. We're going to go over one at the end of this episode, so stay tuned on HBAR, exactly why right now HBAR could be in a position to absolutely moon. I love the team. I've actually been talking to the team to potentially do an event together in Vegas. I spoke on their panel during the WEF in Davos, and wow, phenomenal team, amazing stuff going on, and also crypto made in America, guys. So yeah, stay tuned for that. But let's go back to Trump and breaking the economy and why this is happening, because this is all people can think about. It's causing the market to sell off at record speed. But is this what Trump wants in the end? It seems to be so. And I'm just not falling for it. I'm just not buying that we're going into this massive recession right now and that we're going to have a terrible tank in the economy. I mean, I believe we're close to the bottom. Price-wise, I've been saying this over and over, and I'll say it again. Time-wise, we may have some time to go, but I'm willing to stay the course because, that's what it's all about here, is just having patience and understanding, zooming out, seeing the bigger picture. So, U.S. inflation actually fell to 2.8%, lower than expectations. So for the time being, we haven't really seen that kind of break in the market, but there is a lot of fear and uncertainty out there, and the open interest in treasury bonds is lowering. So there are some signs that it is having an effect on the market, and it could force the Fed's hand to lower those rates, which I believe is what Donald Trump wants in the long term. Here we have 1 week returns for top 10 crypto assets. Hedera, right up there, $10 billion market cap, 19% this week. Cardano, 40%. We're also going to be doing a massive Cardano chart tomorrow. I'll be making a Cardano video tomorrow, so stay tuned for that. And then, of course, don't forget this. Crypto's made in the USA, layer 1 and layer 2 blockchain infrastructure. Infrastructure is what it's all about. So here we have current crypto reserve picks, and these ones will do phenomenal just based on that alone, as well as just bullish charts in the long term. But also you have all of these, and there are a lot included on this list that many people don't think about or talk about, including Theta and T-Fuel. All right, you've got Near, Sui, Stellar, Hedera, Ondo, which is doing phenomenal. That's also a trade setup in our trading group. XRP, all of the big guys. Guys, check out this, screenshot it, download it. This is from Crazy for Crypto's, Digital Dave's private group. I highly recommend that, by the way. If you're an investor and you want some good long-term outlook on the market, I love his group and what he does. Next up, fear and greed. Like I said earlier on, we just hit a 10 in extreme fear. We were just down here. Look at the times that we've been down here. It's not often, and usually not in a bull run. Now, we've had a massive bounce from there and potentially create some more market structure around here, potentially a double bottom. But man, I mean, this is just, if you want to keep it ultra mega simple, buy the extreme fear and sell the extreme greed, and it works out pretty well for you in the end. Now, back to the debate. Okay, I'm loving this debate. The president and his team. So this is Anthony Pompliano. I've done several X Spaces with him, with Proppy, another one that's made in America on my list. Bringing real estate on chain. So this is Pomp's global. So Anthony Pompliano's view. The president and his team are intentionally crashing the market. Is this a master plan, or are we watching uncontrolled destruction? So evidently, I believe it's the master plan. Let's check this out.
Trying to tank the U.S. stock market? That'd be insane. That would have been an absurd question back before the inauguration. Now, the general thought process is that President Trump, he's a businessman, and he's also an investor. He measures the health of the U.S. economy through the stock market performance, and so you should expect that the stock market will go up and to the right if Donald Trump becomes president. Now, I know this was the consensus because I believed it too. I told you guys that that's what I thought would happen. And there was no obvious reason why Donald Trump would allow the U.S. stock market to drop, let alone personally take actions to crash the market himself. But that's exactly what's happening right now. And to be honest, this got people's brains in a blender. Now, here's President Trump talking over the weekend. It's all about his plan to get interest rates and energy down. Take a listen.
I've been saying, let's get interest rates down. You know, nobody ever gets rich when the interest rates are high because people can't borrow money. Interest rates are going.
Okay, so he brings up some interesting points. And one of those main points being when interest rates are low, they can borrow. It encourages more borrowing and therefore gives people more capital to inject into the markets. Nobody wants to borrow money on high interest rates, so it is fundamental that we get those interest rates down. Now, the Fed publicly went out and spoke against lowering those rates right away as Donald Trump wanted originally. So we're taking the difficult route, and Trump has taken things into his own hands, it seems. So it's essential to have lower interest rates in order for the economy to start booming again for that reason. Okay, that's just one of the reasons. And it seems as though he's taken this into his own hands to do so.
And then you know what else is going down? What have I been trying to get down? Oil. Energy. Energy's going down. I'd love to see energy go down.
It's kind of crazy to hear him talk about that. Now, Chris Patel and Amit is Investing, they explain how this plan works. We got $7 trillion of debt. We need to pay it back in the next 6 months. It's a big bill, baby. If we don't pay it back, we'll have to refinance. And the Trump administration, they do not want to refinance that debt if rates are at 4% or higher. So what do we got to do? The 10-year yield, we got to get that thing down. At one point, it was at 4.8% this year, but we got to get it lower. And so how do you get it to come down? Well, markets, they need to be scared. They need to show a little weakness in growth. People got to believe that Doge is actually working and interest rates will slowly start to come down. And the way to do that is you create that fear and that uncertainty. You do it through things like tariffs. And so as you put on tariffs, you can see the slowdown in growth in the short term. You can get the bond market to start buying bonds as soon as possible because they're scared to touch stocks. And then, of course, that gives the Fed, the big bad Fed, the authority to bring lower rates down, which continues to bring the yield down as well.
So there you go, the master plan, okay? People have to believe that Doge is working. We need to show weakness in the markets, and we need to force the hand of the Fed and give him that authority he needs to be able to say, hey, I'm going to lower the rates. All right, it's probably a very simplified outlook on the economy. You know, we're not expert economists here in the crypto market, but these are the kind of data points we must look at and try to understand in order to have a grip on what's going on and not just sell into this kind of over-exorbitant fear. Right? Like, we're not buying it on this channel. I'm not going to sell my crypto at the bottom. Guys, I'm just not going to do it. Now, I might be wrong. We might have a little bit longer to go, and that's okay. And I'm willing to ride it out and play the course. Let the investment markets play the course. I'm willing to do that because I'm in this market with a long-term outlook, and that is what's going to help you be successful as well. Now, back to Canada. So as you know, there's been a lot of back and forth between Canada and the US, and Trump originally came out and said, hey, I'm putting some tariffs on Canada. So after Trump does this, the Canadian Prime Minister, Mark Carney, comes out and says, my government will keep tariffs on until the Americans show us some respect. Another game of chicken. There seem to be a lot of games of chicken going on here. And then Jean Charest says, Canada can no longer take the United States for granted. President Trump is forcing us to take a hard look at ourselves, how we manage our economy, work across provinces, and redefine our place in the world. I will say this again. It's never a smooth sail and a bed of roses when a revolution is happening, when things are being shaken up, when the world order is transitioning and changing. It's going to be a little bit of a bumpy, rocky road, but things seem to be, as President Trump put it, we need a rebalancing in the economy. Whether you like him, dislike him, I'm just purely talking about the policies now in the world and the finances, okay? So I'm trying to make sense of that so we can understand how that all fits in to our greater scheme in the crypto world and in the equities world, right? And what will allow this technology to ultimately flourish. So is this part of that grand master plan to kind of rebalance the economy as a whole? Anthony Pompliano also has an interesting take on this, which I'm going to play now. And it's kind of a joke, but in the end, actually, you think about it and it makes a whole lot of sense. He says, we should merge the US and Canadian economies to create an economic superpower, take down the border, remove tariffs, and outlaw subsidies. Now, what will that look like? Let's have a listen.
We got to talk about something that I think is hilarious. Every great joke has a hint of truth in it, which is why it has been so funny to see the recent comments from government officials calling Justin Trudeau the governor of Canada, or their declaration that Canada should become the 51st state of the United States. Both my American and Canadian friends, they're all laughing about it. But Trudeau may not like it, but I liked my friend Kevin O'Leary's take on the merger of the US and Canadian economies. Kevin said in a recent interview last night that we should eliminate the economic border between the two countries. Let's give it a listen to exactly how O'Leary said this should happen.
Ignore the noise, look for the signal. He talked about it multiple times now. Join the economies. They're not going to sell the country, but if you join the economies, it's the largest economy on earth. China will never catch up because the US is the largest consumer market on earth, and Canada is the richest country on earth of all the things everybody needs every day. All the tariffs have to go. Zero tariffs. Erase that border in terms of the economy and join the economies, and everybody's going to do really well.
Now this makes a ton of sense. The ideal situation would be zero tariffs or subsidies between the two countries. Have an even playing field that benefits from free trade. But obviously that's not what's been happening. Canada's been acting like the big dog. They've been tariffing the United States like crazy while simultaneously subsidizing their industries to flood the US with cheap products so that US producers are at a disadvantage. That is a dirty, dirty game. And if we're playing football, the referee would throw the yellow flag and it would be a 15-yard penalty against the Canadians. No cheating, Canada. But we're not playing football though. So instead, the US government is throwing the kitchen sink at Canada to get them to knock off the crazy stuff.
All right, so let me know what you think of that outlook from Anthony Pompliano, which started as a joke, but developed into a bigger idea, which is an interesting idea. Will these tariffs eventually yield America kind of that negotiation power? That's what I believe he's trying to do, right? So just in, Canadian Prime Minister Mark Carney ready to meet with US President Trump to discuss ending the tariff war. Is it working, guys? Is it working? It looks like it may be working. So also, Kevin O'Leary's team has reached out to me to have Kevin O'Leary on my podcast. What do you guys think about that? What did you think I should ask him? Let me know in the comments. I'd love all your input. And yeah, that should be happening end of March if we do so. So yes, very exciting. Now, to Bitcoin and its levels. This is the Bitcoin 30 minute. As you can see, this is a 1 day 200 MA, a very important moving average to show that markets are bullish. We are right there on the verge, playing around with that moving average. And actually, I think we'll pop back above that sooner than most expect, because a lot of times we can spend time going up and down and popping above and then going below as resistance. But this is our third time now, and we discussed this in the Capital Mindset Trading Group, that this could be a shorter consolidation period than others may think. So we're currently just under that level of 83,836. And we've got a range all the way down to about 76,000 or 75,000. And yeah, we're just kind of ranging right now, waiting for Bitcoin to decide its next move. But the minute it pops above here, the targets are 86,000, 88,000, 90, and 92. So what we did say on the last Capital Mindset live stream, which we do every week, we're doing one tonight. We're discussing XRP, Ethereum, Solana, and also some stocks per request from our members. We said that it's kind of like 90,000 is the next psychological number to break, and from there 100,000. So 90,000 is one of the lines in the sand in order to really truly break bullish again if we break and hold that level. And we've got from Eric Crown here, one of my other favorite analysts in the space, daily bullish divergence starting to form for Bitcoin, only 2 drives as of now. So when we start to, that's another one of the things that Tripp, the lead analyst in Capital Mindset, teaches, that you have to watch for those divergences in order to try to gauge the next move, to try to gauge your entry. Divergences speak volumes as far as, where the next move could be headed. So in this case, it's daily divergence building up. I showed you all of the drives of bullish divergence from the Capital Mindset in my last episode. And here, Eric Crown also states that we're bearish as long as we're below the $95,700 level. So those are some levels to keep in mind for Bitcoin. But again, I want to stress, I believe we're very close to the bottom if we have not seen it already. Now, I want to show you this chart about the M2 money supply. There's been a lot of chatter about this. So it has recently done a pretty significant spike up while Bitcoin has continued to trend downward. And here we have from Chicken Genius, doing a correlation analysis with the help of Claude 3.7. Global M2 to the price of Bitcoin today is the bottom. So that was March 12th when this was written. Uploaded data sets of M2 money supply and BTC. An hour of guidance got the results. The optimal lag period is 57 days with a correlation coefficient of 0.824. The 57-day optimal lag provides important insights for understanding how monetary policies changes may influence cryptocurrency markets with a 2-month delayed effect. So it's saying that essentially the M2 money supply is ahead of Bitcoin by a period of about 2 months. Plotted the graph on TradingView for visual representation, links below. So you can see kind of the ebbs and flows here. And we've just gotten a massive spike up for the M2 money supply. Will Bitcoin follow? All of the charts suggest so to me, that we are close to a bottom and we'll start trending the opposite way very soon. So the question is, are we on the verge of having another massive bounce, if nothing else, for Bitcoin because of the M2 money supply? Here's the take by Arthur Hayes, which I promised at the beginning of the episode we would go over. So the plan, be effing patient. Patience. Bitcoin likely bottoms around 70K, 36% correction from the 100% all-time high versus normal. It's normal for bull market. So I showed you also a chart in the previous episode where the dips are right around that number a lot of times, oftentimes in bull runs, and 70K would make it. Now, also we discussed with Trip from Capital Mindset that we don't often go and visit that previous level of resistance and support in a bull run. So will we go down that far? I'm skeptical of it. It's possible, of course, but I truly honestly believe that we've probably seen the low already. Then he says, then we need Stonks, SPX, and NDX to enter free fall. Then we need TradFi Muppet to go under. Then we get Fed, PBOC, EBC, and BOJ all easing to make their country great again. Then you load up the truck. Traders will try to buy the dip. If you're more risk averse, wait for central banks to ease and then deploy more capital. You might not catch the bottom, but you also won't have to mentally suffer through a long period of sideways and potential unrealized losses. Yeah. So he's saying, essentially, guys, now is as good a time as ever to get positioned. Again, not financial advice, just what I would be doing because I believe we're near the bottom price-wise. But he's saying if you don't want to have any exposure to any risk, just wait until the Fed pivot, until they start deciding to lower rates and inject money back into the market, and you'll be good. You won't catch the whole move, but you'll get in on the uptrend. So those are the options. And otherwise, it's just being patient and letting this stuff play out, letting it play its course, letting the economy reset, and getting ready for the next leg. Here's a clip from my friend David Lin with Arthur Hayes discussing whether or not he believes $1 million Bitcoin is in the cards for 2025.
Arthur Hayes predicts 100K Bitcoin by the end of the year, so that was the right call. And you also talked about what's next. 2025 could see $1 million. Is that still in the cards?
I think we've obviously had sort of the Trump pump and then the realization that the money is not going to be forthcoming as quickly as it would have been if it had been a Democrat in power. But Trump and every other major political force around the world is preaching localism, nationalism, my country first. We're not going to rely on a global supply chain of products. Everyone replicates the same productive capacity that is inflationary. And it requires a lot of money. They're going to have to print the money because they don't have any of it. So that's how we get to $1 million Bitcoin. Let's increase the bank lending so that they build the new factories. Let's sequester savings and do yield curve control, whether outright or surreptitiously, to fix the yield of government bonds while we inflate the supply of credit. So that's how we get to $1 million Bitcoin.
All right, so let me know what you guys think about that in the comments too. $1 million Bitcoin for 2025, very highly unlikely, but 1 million for this cycle, if it could be a super cycle by 2030, in my opinion, totally possible. Also, Kathy Wood, as I said before, doubled down on her price prediction for 1.25 million by the end of this decade by 2030. So yeah, if when in doubt, zoom out. 5 years, 5-year time horizon. Bitcoin heading to 1 million, not half bad if you ask me. So yeah, I am playing this market accordingly. I am in now, I'm positioning now, I'm buying the dip on coins that are strong, which we've been going over in Capital Mindset. In fact, we nailed auction last week. Trip has been posting this chart for a while now and saying, hey, this one is looking different. It's looking like it's ready to pop. It did in fact pop 71% in these market conditions, as they just announced also that they will have an AI agent platform. So yeah, we are nailing all the winners. And now all the moment you guys have been waiting for the trade of the week. We are going to go over the HBAR chart with Trip from Capital Mindset and the massive move that is about to come. I'm really excited for HBAR. I have quite a bit in my portfolio now, and I'm very, very bullish. So let's check it out. Okay, so now we've got Trip joining us. The lead analyst from Capital Mindset Trading Group has absolutely been nailing all of the setups lately. It's been an interesting time in the markets, but he is here to talk about the massive move that could be coming for Hedera Hashgraph HBAR. Trip, welcome to the show.
Hey there, Megan. Thank you. How are you?
Good. We're excited to have you on as always. We like to give these little gems to the audience, people who may not be in the group, to get a taste of what they could get in the group. So today we're going to go over the HBAR chart that seems to be gearing up for a pretty explosive move. Okay, so we pulled the chart up now. Let's have a look at where we were last time this thing happened and where we're gearing up, headed to go.
Okay, so this is HBAR on the one-day chart. Previously in November of last year, in 2024, we saw this massive move from the bottom up to this resistance at about 40 cents. So it went from 4 cents to 40 cents, a 10x move for HBAR. So now we're seeing this pullback to support. You can see there's a possible double bottom starting to form on this support. This support here is actually a 618 retrace. So if you start your fib from the bottom, pull it to the top, it's pulled back about 61.8% on the support for HBAR from here. If we were to get a bottom, I'd be looking at the next targets up. So these are trend-based fib measurements, and these are giving us a measured move of what the previous move was, starting from the bottom of this current consolidation or this current bounce. So if we do get that move for HBAR here, we're looking for a max target of about 181%, and that's up to about 53 cents for HBAR.
Wow. Yeah, I remember you posted this in the group last time we had this big pump, and so many people caught that wave and they were just writing me like, wow, ecstatic, because they had ridden that wave and it was a big one. So we could be potentially on the verge of the next one that we are calling in the group. Trip posted this a while back, and I just want to go back to that. What is the range of support that we're looking at, kind of the buy zone?
For the buy zone, okay, we're going to zoom in here actually. So this is the 1 hour chart. So this is a little skinnier of a support zone compared to the previous chart we looked at. Usually if you look at a higher time frame, you want to give yourself more wiggle room. But if we zoom into the 1 hour, we have a nice clear support that must hold for this bounce to happen. So if you want to get a support entry, you can start scaling in if you get the opportunity in this green support down here, or you can just wait for the breakout of this yellow falling wedge that's forming. So this is a pretty decent trade just from this support to this resistance. You're looking at about a 1 to 6 risk to reward ratio. So you can make 6 times as much as you're willing to lose in this trade.
Okay, so not a bad risk reward ratio. And I see you have set a stop loss here. How should they go about setting up this trade for those who aren't in the group and are wondering what this all means?
Yeah, so the red and green bar on the right-hand side here, this tells you your potential profit at the top. So that's a 49.8% move to the upside. And then the red part of it tells you the amount that you could lose in the trade if it was to go the opposite way. So this is a 7.6% loss if you were to get stopped out from here. But I would just monitor this trade closely if you can on the 1 hour. If you're trading this on a higher time frame, I would just definitely have some alerts set for at least this support level. So if it does happen to dip, you can monitor your trade. Maybe you get a chance at buying something that's poked below support, or maybe you get some divergence. So it's definitely one to monitor if you can. Otherwise, the alerts are going to be the ones that are going to help you the most. So setting an alert, I would just go at about this risk to reward ratio amount, and that would be at about 17.1 cents for HBAR.
Right, where they should set their stop losses, or would you just actively monitor on this type of trade?
I would do both, right? So if you're going to trade short term, then I would have my stop loss set there. If I was doing a longer term trade, I might just consider scaling in. So you give it a little bit at a time and you're giving it a little more leeway into the trade.
Got it. Okay, cool. So we're looking at 50% move on just this next coming pump, potentially if it breaks out. That's phenomenal. I know there's a lot of people that are excited about HBAR here. HBAR is doing a lot of interesting things, including RWA. Crypto is made in America. There's a lot of narratives behind it. Apart from it being a phenomenal team who I've had the pleasure of meeting and potentially we'll be doing an event with at Bitcoin Vegas. So very exciting stuff. Okay, so thanks, Trip. That was awesome. And we hope to see you soon.
Yeah, great. Thank you. Had a great time.
So that's it for today, guys. I hope you enjoyed. Let me know in the comments where you think we're headed near term and longer term in these markets and what you think of Trump tariffs and the economy right now. And that's it for today. I'll see you tomorrow.